There has been a breathtaking rally in PSU bank stocks. The Nifty PSU Bank Index is the best performing index this year, 2022. And as you can see, the most PSU bank stocks have rallied over 100%. As you can see, this rally is primarily because of much cleaner balance sheets. Look at a steady fall in gross NPAs, as you can see, and even better if you look at the net NPAs. Actually, I only showed you 4 quarters. NPAs are even lower than they were in 2016. That is before the asset quality review by the Reserve Bank, which started in 2017. Not just NPA reduction, PSU banks have steadily increased their profits and their loan books. Their loan books are growing very sharply. The latest number will come up for you. It's almost 17% in the last available quarter. The question we're asking is, can the good times last, or is this more base effect and the asset quality review effect? I have with me 2 former Reserve Bank of India deputy governors, Mr. S.S. Mundra, who carried on this asset quality review, himself a 4-decade commercial banker, and Mr. H.R. Khan, also former deputy governor and who currently sits on the boards of several banks. Gentlemen, thank you very much indeed for joining me. Mr. Mundra, let me start with you. How long do these good cycles last? If I remember right, the 1999-2000 cycle lasted easily 10 years.
Thanks, Lata. If you are talking about the market cycle, I won't comment it.
No, I'm asking you about the balance sheet and P&L cycle.
Yes, but if you are talking about the economic cycle, balance sheet cycle, then I would say my personal feeling is it is something which is there to last long, which is there to stay. But just picking up from your opening observations, as you said that there is a base effect or it is the, so there is some element of it to everything. There was a base effect, and AQR banks did high provisioning, and of course the recovery had been a mixed bag. But as you recover, some of those provisioning are flowing back to the books. Asset quality is much better, so all those things are there. But very quickly, why I feel that there are many other reasons, and I would just like to flag 4 reasons that why it should be a lasting rally. One, whatever you have already mentioned, much cleaner book, money coming back, so growth capital is available. Earlier, there was a challenge that banks were constrained for the growth capital. Now, growth capital would be available. Of course, greater challenge would be rather the liability management rather than capital. That is one. Quickly, I think many PSBs have become, on the technology front, they have done a very decent job. They have improved their offering a lot. And if you go back in the history, I think in the beginning, the new private sector banks started with a tech advantage and which created a gap. So that is the second thing. Third, I would say, compared to the past, the book is well diversified. So most of the PSBs, at least the leading one, have been able to grow their retail book either on their own or through partnership model. So what I'm trying to say that compared to past, when the balance sheet were leaning very heavily towards the wholesale book and then the risks were also like that, book is now better diversified. To say that risk concentration is less now. Okay. And the final point is, and which is very important from the organization's viewpoint, that there is a continuity of the leadership, is a work in progress. I won't say that everything has happened today, but the leadership is having a longer now outlook. And the way components are being put in place, I think this will keep on improving. Once that happens, it works both ways. One, it creates you to do a long-term vision and not only look at the short-term gain, but at the same time, there is a check to take short-term measure, which tomorrow can backfire because you are there both to see the positive result of what you have done, but also the negative result of you have something done. Yeah. So I will pause here, but to my mind, these are 4-5 fundamental reasons which will take it beyond the present, either the base effect or the momentarily cycle, but will make it a more sustainable rally. Yeah, that would be my take on it.
I want to take off from your last point, especially where you speak about leadership. Mr. Khan, recently the government amended the rules to say that the MD or CEO can be appointed for 5 years with a maximum of 10 years, indicating there is an intent. And then there is the bank board bureau appointments, which probably also, make for perhaps fairer appointments. There is CRILIC, that database of bad loans wasn't there. So I'm asking you, can we bet that the health of even PSU banks will, stay healthier for longer?
Thanks, Lata. Actually, I missed a bit of what my friend and former colleague Mundra Sahab said earlier. But whatever I heard about the turnaround story from him, I mostly agree with him. The point you raised about, for a long time, public sector banks have been losing their share. And the question is whether the recent turnaround is going to be sustained and whether they can at least recoup part of their market share. I think indications are showing that they are on a positive track. But there are quite a bit catching up to do. For example, still now, in terms of CASA, in terms of return on asset, in terms of NIM, of course, I think last quarter things have improved substantially when 26,000 crore profits were made by public sector banks.
Yes.
And NIM has gone up, I think, more than 3, which was slightly less than 3. And they are catching up with the private sector banks. But the question, as I mentioned, is whether it can be sustained and whether they can get back the market share. I think there the point which Mr. Mundra mentioned about technology is important. I think things are happening, but I think much more needs to be done. As you know, banks have become more or less a technology company.
Yes.
And the type of focus, type of manpower public sector banks have, I think things have improved, but I would not say that things have improved so much that they are in the right position to compete with others and make it a sustainable turnaround.
Okay.
I think there we need to work more, public sector banks. The point you mentioned about increasing the MD's tenure is a good beginning, but a lot more needs to be done in terms of talent management in public sector banks.
Okay. So your short point is, as of now, there will still be that big valuation gap. I mean, I don't want you to talk like a stock analyst, but broadly, you think that the valuation difference between private banks and public sector banks, there is merit, there is reason, Mr. Khan?
No, because public sector bank, all said and done, there is a backing of the sovereign. So
okay.
that has to be taken that has to be taken into account.
Yes.
But the point I was trying to say, whether this turnaround is going to be sustained, and whether the public sector banks can get back part of their market share, which you have ceded to other banks.
Okay.
Particularly private sector.
I take your point
and
there.
One area which is a reform area, which I think consolidation has happened. It's a good thing. I think more may happen. But in terms of professionalization of banks functioning in terms of manpower, I think holding company structure, which was suggested by some of the committees,
yes,
where professional holding company holds these banks, I think that needs to be looked at. Because we need to sustain, and part of the turnaround, mind you, Lata, is also because of cyclical reason, because interest rates are going, advances have gone up, and deposits have not grown. That is one.
That is true.
And a lot of cleanup has happened because of variety of reasons. And regulatory dispensation during pandemic, both from the government and RBI. So we have to go beyond these cyclical factors.
I get your point. I get your point, Mr. Khan. Yeah, and that is exactly the point I want to toss back to Mr. Mundra. Mr. Mundra, you retired, before you came to RBI, were the chairman of Bank of Baroda, and over there, a private sector experiment actually happened. And today, Bank of Baroda claims a much higher price to book compared to any other public sector bank. That experiment seems to have worked. And even in terms of their chief digital officer, lateral recruits have happened. It seems to be an experiment that has succeeded. So do you also think that if the advantage is to continue, some holding company structure and professionalization, lateral recruitment is needed?
Lata, I would say it needs to be a selective, requirement, selective experiment. I've been telling, I think, for decades that as far as the performance is concerned, performance is ownership neutral. So let's not always believe that, if leadership is brought from the, say, outside, it's only going to be a panacea. Because, yes, I was at Bank of Baroda, you are talking about a Bank of Baroda, but you also have a state bank. Which probably had done slightly better with all the
Yes, absolutely.
homegrown talent available. The point is, and it goes back to the point which I was mentioning previously about the continuity of leadership and ability to do a long-term planning, which has made the difference between, to my mind, what SBI would have done and what many other banks have done. But I take your point. The last 5, 7, 10 years have witnessed major changes, and Mr. Khan was also telling it has really become like this, that banks are technology company who are also doing the banking. So I think there is a need to do this infusion selectively in certain areas. Technology is clearly one area. Even I think risk management is an area where this kind of things is needed. Even marketing could be. So I think there are few areas where this is needed. And this is not something which cannot be done, or there are any regulations which are stopping it. In fact, Bank of Baroda had been doing it now, I would say, for 2 decades.
Okay.
And of course, with a mixed result, there had been some very good outcome. Elsewhere, outcome had not been so well.
Okay.
So that is how it is.
Okay.
But I go back to and what Mr. Khan was telling just for a minute. See, when I said my opening statement, I didn't mean to say that whosoever are leaders today, they will become laggard today, and who are laggard, they will suddenly become leader today. No, it's not going to happen. Even I don't agree. I don't see a possibility what Mr. Khan is telling that PSB would be able to gain back their market share. I think market share readjustment will continue because now it is not only private sector banks, there are variety of banks and fintechs who are competing. But pie is growing. What my sense is that the slide or the pace of losing which was happening would be controlled, would be restrained. Realignment will keep on continue, but with a bigger pie, even with whatever market share, if you defend it, I think it can still bring a good profitability, good ROA.
Okay.
There's a there. Okay. And then within PSB also is not that the uniformly everyone would be performing in the same fashion. There would be winner, there would be losers, there would be front runners, there will be followers.
Yes, absolutely. You summed it up very well, and Mr. Khan brought the correct points to the table, that market share, the ability to garner low-cost deposits and current and savings accounts still remains a challenge. Thank you very much, Mr. Khan and Mr. Mundra, for joining us. The valuation gap between PSU and private sector banks may continue simply because some of these problems have not yet been answered in the public sector banks. The answer lies in probably implementing that reform of, pushing the public sector banks under a holding company, in some ways giving them relief from the CVC and the CAG so that there can be more professionalization of management. We wrap up on Bazaar.